Hey everybody, hope you're doing well. We're going to go ahead and break down this trade that I took that ended up making me $3,000 and go over the model that really helps me get consistent payouts with prop firms. So without further ado, let's go ahead and dive into it here. Main thing that we should be looking at is what is our draw on liquidity. We have these equal highs up here, noted EQH, and then above that we have this weekly swing high. If you look on the left chart, weekly swing high, it's a relative equal high because the overnight highs went up, failed to take that, and then dove lower. So you see me place my buy limit right here. It is at this inversion fair value gap. What we had was an initial run lower in the morning. So we actually spiked up first, created more buy side with equal highs up here, and then had that very classic 9:30 a.m. Judas swing lower. So Judas swing is just a manipulation in the opposite direction of where you want to see price go. And where was it going? Well, next thing that's as important as your draw on liquidity is your point of interest, and that was running into a 1 hour fair value gap, which on the left chart right here, we're actually on a 15-minute time frame, but it's an hourly fair value gap here, and we have this old new week opening gap right here. Okay, so I just got triggered into this trade. I liked this as an inversion fair value gap. I liked this lower one as well. The fair value gaps that are noted in orange are going to be inversion fair value gaps. So I'm anticipating this upper one to be an inversion fair value gap. It is also your first presented fair value gap of the day, so it holds a lot of importance there. But you're going to notice this little dash gray line right here that says 0.25, and then this green one that says 0.5. These are your opening range quadrant levels, your opening range gap quadrant levels. So just for reference, I actually pulled it up on the trading view chart just so you can see because it's very important. This is the previous day's settlement close at 4:14 p.m. And then this is the opening of the day that we were trading at 9:30 right there. What you're going to want to do is grade this because you're going to want to get those levels of the upper quadrant, the middle, and then the lower quadrant. And you can see I was looking at this bounce off of the midpoint right there, and then looking at the reaction off of the quadrant level right here. So getting back into the video here, this is that opening range quadrant, opening range gap quadrant level right there, the upper. But I really was confident in a move higher because of how we perfectly respected the midpoint of the gap right there. To me, that is a bullish algorithmic signature, followed by PD arrays that are kind of confirming to me that I'm expecting higher prices, because not only am I looking at this as an inversion fair value gap and this as an inversion fair value gap, but I'm looking at how the candlesticks are actually reacting to these levels. And the midpoint of every gap and inefficiency and imbalance is extremely important to me because I'm looking at how we're reacting to them. For instance, I'm looking at the midpoint of this gap right here. You see me, or not this gap, but this wick. You see me mark it right there because I want to see if we have a willingness to get through it. Wicks are gaps, and the midpoint of wicks and gaps are important. For instance, in this inversion fair value gap, look how the bodies, or the, excuse me, look how the wicks went all the way down, tapped the upper portion of it, but then the bodies closed all the way back above here. All right, so that's telling me that we're extremely bullish. So I liked the close above midpoint right there. A close above midpoint is telling me that it's more bullish than bearish, and we're starting to explore in the upper half of this. And then I used these two down close candles as an order block right there, paired with this bullish fair value gap. And look how we hit the midpoint of that right there. Absolutely perfect. So that's exactly what I want to see. The body comes all the way back up and closes above the midpoint of this. So this was a big down close candle, and then it showed a big reaction to close above right on the midpoint right there. I was also looking at this one because really with these wicks, what you're wanting to do is just look at the extremely long wicks. And then on the daily time frame, if you do the very same thing, grade your daily wicks and trade the lower time frame fair value gaps and order blocks that overlap those daily wick quadrants, those are going to be the ones that you can trust. And that's not noted on here, But you're going to see if you were to do that, that these gaps right here overlap daily quadrant levels. So I'm looking next at this first presented fair value gap, right? Like I mentioned, it was in orange, and since it's in orange, I want to see us show a willingness to close above it. Just hit midpoint right there and had a little bit of a reaction back below this 9:30 a.m. opening price, otherwise known as the opening range gap high in this scenario. So that's why you saw me move my stop up a little bit right there, because I want to see us push through this. So I'm really liking this candle right here. And I'm just waiting to see it close above there, because we also have a couple timed elements, time levels right there. We have midnight open, and like I mentioned, that 9:30 open right there. So I like that close above. Notice how this little 1 minute candle went lower first and then popped up. Okay, so once we had that, that's when I felt comfortable moving my stop loss to break even. There's no way it should come all the way back down here if we're going to be bullish. We have this initial high right here. So this is the first high, the first swing high that was made in the New York Open on the 1 minute time frame right there. So that's important. Now we have a 1 minute fair value gap right here that you see me mark. The fact that we don't even show a willingness to go and tap that and we're already displacing higher is telling me that we are really, really bullish, and we should see a pretty fast reaction through these equal highs and that initial high that I was looking for at initially there. So at this point, I'm feeling pretty comfortable in this trade. I'm feeling confident that we'll see a run higher. January price action has been very tough. I've taken a lot of break-even trades, and so you're going to see me not hold for the full target right here. Once I saw this candle, I thought I'd be really upset if what's happened to me so many times this month, where it goes up to my target and then doesn't hit my target and comes all the way back down. So I ended up taking the full position off right there. And you just see in this video that it was just trading on one account. That was about a $1,400 profit on this account. This was off of my funded futures account. I also took this trade on 5 Top Step XFAs, which are funded accounts. So that's where the grand total comes in at $3,000 right there. So yeah, very good trade right here. Very good profile. One of my favorite models to trade is that 9:30 a.m. Judas swing right there. But overall, again, a great trade, and I hope this breakdown is helpful to you. The one thing that I think you should take away from this is really pay attention to gaps and their quadrant levels, because quadrant levels and watching how price reacts to them, for instance, at this right here, this midpoint, and then this upper quadrant of the opening range gap, this is giving me full confidence that we're going to see the run higher. It's just the PD arrays are giving me my entry mechanism, but the bullish algorithmic signatures I'm seeing are giving me that confidence that we're going to see a move like this. This is a market maker buy model, right? We have the initial move lower. The inception of the move occurs at the midpoint of the opening range gap. We swept London low. London equal lows that was resting above a 1 hour fair value gap, and the new week opening gap right there. Go into that. This inversion fair value gap right here is overlapping the midpoint of this new week opening gap. So you can't see the new week opening gap on the 1 minute time frame, just the 15-minute time frame in this instance right here. But you're going to see that this is a really good inversion fair value gap, and this is a good BISI right here. So this is a balanced price range. I trusted this because it overlaps the midpoint of this new week opening gap. So the midpoints of those gaps of wicks, they're all very important. And if you start studying and taking notes, and really if you just trade PD arrays that overlap the midpoint of these areas of interest, you're going to find your win rate go up a lot. Take my word for it. I've started to only trade PD arrays that overlap these midpoints and otherwise known as consequent encroachments. And my win rate has skyrocketed. And you can literally anticipate when and where PD arrays are going to form. And then once you see that and then you execute on them and you see runs like this, your confidence is going to go through the roof, and that is huge as a trader. So I'll end there. I hope this video was helpful for you. If you have any questions, please feel free to leave them in the comment section. If you aren't subscribed, please give me a subscribe. This is for free, and you know, it helps me be confident that these videos are helping someone out there. So again, thank you for watching, and good luck and good trading to you.